This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Everybody, another episode, Real Estate Investing 365. Today I got with me Nick Giulioni again for the second time. If you guys remember, he was back in some of the earlier episodes, and he's back because he's got a lot going on in life. He's now relocated. He's in a different part of the country and still doing a lot of real estate. So Nick, what's up, man? Thanks for being here.
Man, I am so excited to be back. This was actually my first podcast interview I ever did, and it's so nice to kind of come full circle here.
Yeah, absolutely. Now he's got more podcasts under his belt probably than I've recorded. So that's good. This interview should be okay because we're both maybe not good, but decent at talking. So that's good.
We're seasoned pros. We've got this.
Seasoned pros. Yeah, that's it. So for anybody that hasn't heard you on the other podcast, which I recommend you guys go back and listen to it, kind of give us a rundown, who you are, where you came from, and how you got started in real estate. Then we'll dive into like what you've been doing recently.
Yeah, absolutely. So I think last time I was on the call here, I had about 45 doors and had done that in about 2.5 or 3 years. Up to that point, I had lived in California, both Southern and Northern California, in technology sales, and was able to scale a portfolio very quickly out of state in Indianapolis, using a variety of different strategies, including going the turnkey route, doing the BRRRR method, in addition to a bunch of creative financing through portfolio acquisitions. I did a lot of seller financing where I was able to buy multiple properties and actually get paid at closing. So it's a pretty cool little process. And since that point have done similar strategies and continued to grow.
Okay, right on. And then, so what did you do as a career? And you probably still do the same thing, but what did you do as a career before you got started in real estate? And is that the same as what you're doing now?
Yeah, well, I've jumped around between a variety of different companies. I have been in technology sales. So generally what that has looked like historically is selling hardware products. I've worked at networking companies like D-Link and TP-Link. More recently, I've been in the gaming space. I've worked at companies like Razer, Corsair, and now I actually work for Oculus within the Facebook ecosystem. And what I do is I sell to a variety of different retailers these hardware products. That's been companies like Amazon, Best Buy, Newegg, and most recently I actually work in the direct-to-consumer channel. So I run Oculus.com and portal.facebook.com for the Facebook team.
Oh, sweet. Yeah, that's awesome. I've always wanted to try one of those Oculus headsets,
Oh, they're pretty sweet, and the
they?
price is only coming down. Yeah, they're pretty darn sweet at the moment. I think they're one of the hottest products this last holiday.
Do you get this for free or what?
I get a sample every once in a while. So I definitely, my wife really enjoys doing all the fitness classes in there. It's pretty cool.
Okay. Yeah. I wonder, does it hurt your eyes a little bit? Because I feel like when I look at the computer all day or my cell phone, like my eyes gives me kind of a headache. I would imagine it's sort of the same thing.
I wouldn't recommend staying in it for 8 hours a day, but I think for 20 minutes, a couple hours, I think you're going to be all right.
Yeah. Okay. Yeah. So you mentioned that you were living in California, Northern California, Southern California, when you kind of started your this sales technology career, because obviously Silicon Valley and all that stuff. You did a transition and you now moved. Is that Indianapolis? You kind of mentioned where you were investing. Is that what you did?
Yeah, absolutely. So it's a funny story. We were sitting there during the quarantine, and we saw that rents were dropping in the Bay Area, and we were a renter up there. And so we just decided, heck, let's reach out to our landlord and kind of play hardball here. Our lease was over, and say, all right, you're either going to lower our rent or we're going to move. And he called our bluff and sold the house. So in that moment, we're sitting there, and we had to figure out where we were going to live. And given the fact that we own some investments out here in Indy, we said, you know what, screw it. Let's go move closer to the business. And so, yeah, we moved out here. We packed it up. We tossed the 2 dogs in the car, and we hit the road and bought a pretty darn cool property. I don't know if you want to kind of dig into that one. It's an interesting story.
Yeah. Well, first, your job was okay with you moving out there? Or was it just during COVID? And then kind of since you moved, they just said, okay, well, go ahead and stay out there? How'd that work?
Yeah, so they're still kind of determining what their work from home policies are going to be permanently, but at least for the moment, they're allowing us to work from home. I think through July, and we'll see. I think that probably gets extended, just kind of given how the rollout's going.
Yeah, I mean, hopefully. I'm sure you're good at what you do, so I'm sure they're not going to just be like, "Oh, by the way, Nick, sorry,
Yeah,
you're out of here."
no, I'm not overly concerned. Something will be figured out.
Sure. Okay, so you guys decided to move to Indianapolis. Had you been to Indianapolis before, besides the buying the properties, or is it strictly because, hey, I own these properties out there, I just want to be closer to the business and just expand what I'm doing?
Yeah, pardon me, I had been out here several times. I would come out about once a quarter to have conversations with my different team members. My wife had never been out here, and honestly, I think she had a perception that it was just some like ramshackle little hick town, and so she was definitely impressed when we got out here. And it's a bustling city with awesome food, awesome entertainment, tons of great stuff to do. So it was an eye opener for her. It was kind of cool on top of the fact that we were getting to move closer to business. We actually have some distant family out here, so we've been able to socially distanced get together with them and do some stuff in addition to having all of our team members over for meals and stuff to really just solidify the relationships that we had built over the last 3.5 to 4 years.
Okay, cool. Yeah, that's good. Did she like how's she doing with the winter? Because California is beautiful, and now I was telling you offline that the Idaho winter for me is, it's not even that we get that much more snow. We get less snow here than I did at home where I'm from. It's just so much colder more often. So how's she handling that?
Yeah, it's cold. But she's one of those people that loves a good scarf. So I don't think the cold is really the problem. I'll tell you, we've got the two dogs. And, I'm wearing my two dogs in a Tool T-shirt here. We've got the two dogs, and just dealing with the snow in their paws, that's been the real pain. But other than that, no, it's hasn't been too bad. We really enjoyed the kind of tropical feeling summer. I'm a huge fan of Indy overall. I think it's a really, really cool market.
Sweet. Yeah, a lot of people seem to be moving there, and obviously other places, and some tech jobs are coming like more to Indy, Cincinnati, those types of areas, Columbus, Ohio, I
Colorado.
think, yeah,
Yeah.
Colorado, all over the place. So, all right, so you guys ended up buying this house out there. You mentioned that it's kind of a fun story. So why don't you dive into that? Tell us how you got that property there.
Yeah. Yeah. So this is a property I had my eye on for a bit. They had initially listed it at $400,000. It was two houses on 3 acres in this like really nice A plus class neighborhood called Fishers. It's just north of Indianapolis. There's like a stream going through the back. It's just absolutely idyllic, really, really beautiful. And it was listed at 400. They ended up dropping it to 350. And I just made an offer. I said $300,000. Let's see if they bite, and they did. And so we end up getting under contract, and I found out exactly why it had dropped so much. And the reason is because two houses on one lot in an area like this is something that's extremely unconventional. And getting the appraisal done was extremely difficult because there were no detached duplexes in the area. So I ended up having to work with, I think it was 5 or 6 different lenders before I found one who was able to essentially underwrite it appropriately. And we ended up having to use an FHA loan in order to get this thing under contract. It was, really, really a pain in the butt. But when we finally did get that appraisal, we got an as-is appraisal at $330,000, and that was before they had even, and this was a requirement when we purchased it, that they replaced one of the roofs and do a couple other repairs on the property. So we immediately bought the place, had built 10% equity just by purchasing the place. And then, like I said, there are two houses on the lot. We renovated both houses and did kind of a light renovation on one, a heavy renovation on the other one. And we decided to Airbnb out the second house. And so the math we did essentially was the second house would probably long-term rent for about $1,750 to $1,800. We've been Airbnbing it out and netting in the range of $3,000 a month. So just absolutely blowing away that long-term rental while we've been living in the one next door. And the dogs are making friends with all the Airbnb guests. It's a pretty darn cool setup. And I'm actually sitting right now in our Airbnb as we're renovating and completely redoing the kitchen and bathroom next door. We're actually in the middle of a refinance as well, where we expect the appraisal to come in in the $400 to $425,000 range. We're going to be all into this property for about $340,000. So we will have built, $60,000 plus worth of equity just by purchasing this property, and it's actually cash flowing,
Yeah.
despite the fact that we're living in half of it.
That's crazy. Even as a long-term rental of 17, 18, $1,800 a month, it would still pay your mortgage more than your mortgage on a $300,000 purchase, right?
Exactly.
That's awesome.
Yeah. Yeah. I think
Man.
with PMI insurance and taxes, our mortgage is about $2,000 right now before the refinance.
Oh man, that's sweet. So I wish I could get a property out here in Idaho with which it was so funny because 10 years ago, people were like, let's go to Idaho for the cheapest prices, but places would come up. But a property with 2 houses on it and you can rent one out for 300 grand. What a deal. I'm surprised it didn't move faster.
Well, the issue was the financing. And that was the hard problem that I had to solve. It had been under contract 2 or 3 times and they couldn't figure out the financing. And so that's where you get the outsized returns in real estate. It's something I talked about in my last interview, I'm sure. It's the way that you're able to go out there and get returns in the 15, 20, higher than that, infinite returns in a lot of cases, is that you actually have to go out there and solve somebody's hard problem. Like this isn't just like going on and buying one share of GameStop or something, or Tesla to be a little bit more long-term thinking. Where you buy it and you're done. This is something that you have to go out there and put some labor into if you want to get the crazy returns. We invested, what is it, like $40,000, and we're going to get all our capital back and then more than double it in less than a year.
Yeah, that's awesome. Yeah, talking about that GameStop and AMC, all that stuff going on right now. I realize that I'm definitely needs to stick to real estate because, I had bought like $6,000 worth of AMC stock. This is a total tangent, by the way. Like $6,000 with the AMC stock about a week ago, but just as like a long-term, it's down now, country's opening back up. It'll probably go up. And then all of a sudden I just happened to look at my stock account one morning and it's at like $20 a share. And I'm like, oh, like I just made 20 grand. So I sell it, right? I sell it right away and take the profits. And then I was thinking, well, if I made it that much and it's that volatile, why don't I try to trade some of this and try to like make a bump every day, a couple grand. I lost like $5,000 of my 20 grand profit, so I'm still positive, but I was like, okay, let me get out of the gambling stock trade and then just stick to some long-term safer investments.
And I think you're touching on something that's kind of important, regardless of whether or not there's stock manipulation going on. I think everybody's a genius in a bull market. Everybody that's investing in the market right now that thinks they're fantastic at this. Some of them may be, but I think the vast majority of the people that are making these bets on single companies are probably going to be pretty upset when it all comes home to roost a little bit. Maybe once all the stimulus money stops coming in and the retail traders aren't there kind of propping things up.
Yeah, that's definitely true. And I don't know when it's going to happen. I lost out. I've been losing out on contracts left and right here that I've been making. I probably send like 3 to 5 contracts out a week, like offers. Right. And I went on one the other day just to touch on that. And the house would probably sell on the market for like $275. And I was just going to buy it and wholesale it and put it right back on the market. Cause she just told me, I don't want the house. I just want to get rid of it right now. Close as quick as you can. She inherited it. She didn't want it. So I offered her, $230 on the house, which is not a very big margin, but I can put it on the MLS for, with my partner and not have to pay very much. Well, somebody came in and bought it an hour after me, or offered her $245. And I was thinking, what if it doesn't sell? So they're at $245 minus commissions, and they're going to sell it maybe $275. They're going to risk all that money and, to make 5 or 10 grand. It's like people are betting on the appreciation in the hot markets. Maybe it'll last for another year, 2 years. I don't know. But if it doesn't, I guess 1 or 2 of those deals can kind of, take a toll on you really quick.
Oh, absolutely. Absolutely. Yeah. I mean, when you're making these bets, they cut both ways.
Yeah, they cut both ways, that's for sure. And it only takes not that many to like hurt you. But back to what we were talking about. So you said the financing is kind of what helps make or break deals. So how did you end up finding like the right financing? Like what was the steps on that? How do you go about finding like the lender that'll make the deal happen?
Yeah. Honestly, I called up, I think it was probably 15 or 20 different local lenders in order to try and find one. I got a lot of no's, I got a lot of no answers, just given how crazy the market has been. But I actually just went on Bigger Pockets, and I literally was looking up for somebody who had had the same problem, and ended up finding somebody who responded, a mortgage officer who had responded to it, and ended up contacting that individual. So for anybody who's out there, like, don't assume that you have some original problem. Every issue in real estate has probably been had at some point. And if you just think about the number of posts on Bigger Pockets, you can just go out there and search for it. And if you find the right search terms, you can probably find, the answer already out there. And so that's exactly what I did. Called up that lender, and he handled it. Now, it was still a complicated transaction, but where everyone else said no, he found out a way to actually pull it off.
Yeah, having like a great, like a gung ho lender that somebody like willing to like put in the work is like key.
Yeah.
You know what I mean? Somebody that's like really working hard. Did you make a post and say like, this is the problem I'm having? Does anybody else have that? Or you just like searched other posts and then he reached out to you?
So I searched other posts, and he solved somebody else's problem that was literally having the exact same issue in a not too distant market. And so I just reached out to the guy.
Oh, that's sweet.
Yeah.
What a tool that is, like Bigger Pockets, or really anything now that we're in, even Facebook groups. I'm finding there's all your local Facebook real estate groups. There's a lot of like nonsense going on in some of those, but at the same time, all you need is one helpful person that to come across that can help you make the deal. So that's good.
And I'd love to make a point on that. I'm in several Facebook groups specifically about the Indianapolis market, and I just really want to call out how incredibly helpful people are. Your listeners might think that they're kind of dealing with their competition out there, and that is largely the case, but this is probably the most inviting community I've ever been a part of. It's just absolutely a really cool group where everybody seems to want to give back within the real estate community. And so I wouldn't hesitate to join local groups and really engage in Bigger Pockets. You'll see I'm relatively active up there, just trying to give back as much as I possibly can. And I know that there are dozens and dozens of people out there looking to do the same.
Yeah, heck yeah. Well, that's good. Yeah, I think that people are kind of transitioning more to like that go-giver attitude, as opposed to like holding it on your own and kind of not sharing because you're afraid of the competition. But most of the people that you tell what you're doing or ask for advice, like most of them aren't going to really do it anyways. So it just helps you get better at teaching people and makes you better and all that sort of thing. And reciprocity, or whatever that word,
reciprocity, I think, is that one.
Yeah, I'm hard to say. Anyways, it comes back to you tenfold most of the time.
Yeah, 100%.
Yeah. Okay, so you mentioned that before you guys moved out to Indy, you had something like 45 units. Now, you mentioned last time that you bought like 30 of these units or something like that from one seller. And that's where you actually got paid at closing, because I think you closed after the first of the month. So you got a credit back for all the rents. So you got some, right? You got like a $30,000 check at closing.
Yep.
Okay.
Yep. And so that still in that entire portfolio, absolutely killing it. I actually pulled off a similar transaction not that long ago in what I would consider an A-class area here in Indianapolis, in the outskirts, called Avon. Was totally unintentional. It was one of these situations. A friend of mine needed to do a 1031, and so I ended up finding a portfolio of 17 units for him. For him to purchase, and I negotiated on his behalf for seller financing on 8 of, essentially, for the sake of the conversation, about $1 million worth of it to be seller finance, and he would come with cash for the rest from the 1031 exchange he was doing. Did all the negotiation. At the last minute, his wife decided that she didn't want any more debt. So almost blew it up. I was like, I raised my hand. I'm like, sure, I'll take the debt. And so they ended up coming in and buying 9 of these incredibly awesome, nice A-class 2s on a community. Like, we own this entire little 17 unit community. And I picked up the other 8 seller financed, and very similarly actually got paid at closing. Very happy with how this one turned out. I actually just got an appraisal on them, bought each of them for $130. 2 of them needed to be updated a bit. Just did that, and they just appraised for $160 a piece after investing probably $30,000 total into 2 of the units.
Oh wow,
so,
that's great.
Yeah.
What's the rent going to be on each of those properties?
Yeah, they were under rent when we bought them. Average was 1058 across all of them, and we are as they vacate, we're re-renting them for 1350 a piece.
Sweet. So you got like better than 1% rule, what they talk about,
Yeah.
which is a great deal. How did you find those? Was it an on-market deal that just you happened to come across?
Yeah, it was an on market, and similarly to the conversation we had before, it was again solving a hard problem. Transacting on portfolios is difficult. Most people can't get the financing associated with that, and I would actually love to circle back to financing a little bit later. But most people can't figure out the financing across a portfolio of single, single families or multiple single, two unit, 3 unit, 4 unit, whatever. So when you can come to the table and solve the problem of financing across multiple of them, like you're actually solving a real issue that sellers are struggling with. So that's how we were essentially able to come in there. I brought, my partner who was bringing in $2 million cash, and I picked up the rest for a little over $1 million.
Sweet. And then, so you picked up the rest as far as you paid for the debt, or you got seller financing?
I got it seller financed from the seller. So instead of them taking it.
Yeah. So you got 9 more units for no money down?
8 units, no money down. Yeah.
Oh,
yeah.
Okay.
At 130 a piece.
Yeah.
That just appraised for 160.
Sweet. Okay. And then what do you think the cash flow will be monthly after all that's settled and everything?
Once we're done bringing up rents, which we need to do, it's going to be about $150 a month per unit.
Oh, sweet. Okay.
Yeah.
Cool.
So not too bad, but then you also get the loan pay down associated with that and all that. I'm going to be actually refinancing them very quickly here into conventional. It's going to be a 25-year amortization type of loan with a local credit union.
All right. Sweet. A minute ago, we talked about your other properties. You kind of like learned some ins and outs on that. We don't have to dive in too much because I know there's like some, litigation things going on with those. But if you can kind of explain like a broad overview of like what might have happened or like what you learned in the process.
Yeah. Last time I was on here, I had about 45 doors, and it wasn't too long after that that I had a falling out with my property manager, and there was definitely some money lost in that transaction. Currently, very happy, new property manager, things are resolved. But I learned a couple of lessons in that entire process that I think are important for people to be aware of. First and foremost, I'd highly recommend not consolidating your agent and your property manager. I think that's something that's a little bit dangerous and in some cases creates misaligned incentives. Plus, there are advantages to having more people in your corner looking over each other's shoulders rather than, one person making profit in 2 different centers from your investing. Have 2 different people that are kind of contingent upon one another to succeed. There does tend to be a little bit of value there. I would say that's kind of first and foremost the number one lesson. And then the second is always have a backup plan from a property manager. It's very easy for them to go out of business. It's not terribly uncommon. It's actually something I've seen since this event occurred. And so I would always be looking for backup property managers. Make sure to network within your local market to figure out people who are also investing there and see if they're happy with their property manager, just so that you're not scrambling if something ever does happen.
Mm-hmm. Yeah, definitely. Yeah. And what he's saying, everybody, is when he's talking about the property manager and realtor being connected is like, if you find a property or a realtor, an agent to help you out, if they're just like, oh yeah, I work with this partner, I have a partner that does property management and we work together on all the stuff, that could be great. But it also could be like, well, they're going to work together to kind of like get you maybe pay higher price or make you like trust the other person more and get you kind of into a situation where they're not looking out for your best interests, like both sides, right? Is that what you're saying?
Yeah, that's largely the case. And or a lot of people actually use their agent as their property manager. And so that's not something I'd recommend either.
Right. Okay. So you mentioned like networking and trying to find more, second options or third options. What do you think the best way is for people to like network in a different market, like especially if they're going out of market? Should they just get on Facebook, or should local Facebook groups, bigger pockets,
Yeah.
or should they actually fly out there and meet these people? And like, how does that conversation go?
Yeah, no, that's a fantastic question. I'm going to sound like a total corporate shill here. But yeah, the Facebook groups are absolutely fantastic. I'm a huge fan of them. That's where I do the most of my networking with regards to real estate investing. Bigger Pockets is fantastic. I would say it's not as good at necessarily local stuff. I would say it's generally strong for broader networking, but not necessarily specific to a market. I definitely think getting out to your market's absolutely key, though. Seeing people eye to eye, face to face. I mean, I wouldn't say that you can necessarily always trust your first instinct when you meet somebody face to face and there's somebody nice to hang out with, but it definitely is a check in their favor.
Yeah, one thing I've always kind of had a problem with, I don't know if it's a problem, but I guess my social networking skills are kind of lacking, because then I always feel like I'm bugging the people, right? Like if somebody's in a market and I kind of meet them and I've talked to them a little bit, even if I've flown out there and met them in person, I don't. It's hard for me sometimes to like reach back out to them asking for favors without it seeming like I'm trying to take advantage. So, any tips on like trying to work that relationship a little bit better?
Absolutely. Yeah. I assume that the last time I was on here, one of the tools that I called out that I use on a daily basis is a piece of software called OmniFocus. And that is what I use as my personal CRM with people. And so, Justin, you're in my OmniFocus as somebody that I want to keep in my network and keep warm because, I always enjoy our interactions. My recommendation is have a cadence with how often you want to talk to certain people and make sure you're hitting it. So, that's first and foremost. And when you're talking to them, everybody likes to talk about themselves. Heck, that's the reason I'm on this podcast is I just enjoy talking about myself and everything that my wife and I are able to accomplish. So, make sure to go back, take notes when you talk to people and ask them about how things are going for them. Heck, when you and I hopped on the call, first thing I wanted to know is how your business is going. I know you moved out there. It's something new. Everybody likes to talk about themselves and their families. So just, always know what's going on in these people's lives and ask them about it. And they'll be more than willing to kind of share and just kind of keep the dialogue open with you. And it doesn't need to be a constant conversation, but a quick text to these people every once in a while, a quick Facebook message does wonders for keeping you front of mind and in kind of within their circle as somebody that they're considering when investment opportunities come up.
Yeah, no, that's definitely true. I understand what you're saying. And not always just bringing them questions like, hey, can you help me with this? Hey, can you help me with this? Because then that's bringing the situation back to you, right? It's like you want to create that personal connection. You guys know about each other's families, your personal life, and then down the road, it might take some time. If something comes across, hey man, you interested in investing in this property? Or hey, you want to help me find a property out there? Maybe we can invest in together. Those relationships will build over time.
Yeah, you just hit on a really good point. You dig the well before you need it. Generally speaking, when I'm networking with people, I'm not asking them for anything. I'm just seeing how they're doing. I want them to talk about themselves such that, when I have a question, I can, text them anytime. It's not a problem. For instance, I've got a buddy, Dan. He and I, talk quite a bit. He's become a good friend over time. We're kind of real estate buddies at this point. But I shot him a text this morning. Hey, what's the cap rate in this neighborhood? He immediately went to his network and found out because he's very well connected within the commercial space here, and got back to me. It wasn't even a thing because we've built such a strong relationship over time. You dig that well before you need to drink.
Yeah, definitely. That's great advice. Okay, so we've kind of touched on what you've been doing, what's been going on. What are you going to do in the future, and like what current plans or current projects do you guys have in the works right now?
Man, I have so many darn projects in the work. It's
That's good.
so much fun. I'm really trying to be better about my social presence and putting that out there. So that's first and foremost. There are a couple of pillars to our business. We're looking to do more fix and flips. It's something that my wife and I really enjoy doing together. So that's been a ton of fun. We're doing several more BRRRR projects. We're in the middle of one right now. That's going really well. And for your listeners who might not be familiar, that's buy, renovate, rent, refinance, repeat. I think I got all of them.
Yeah.
All the letters there. So we're doing a couple of those. One of the things that has been absolutely critical since getting out here has been my ability to work with local lenders. There's so many local lenders who won't work with out-of-state guys, but if you're in state, they'll actually work with you. So I don't know if many of your listeners have an opportunity to move out to their markets, but I'm getting absolutely fantastic terms on commercial rates, even on single family homes. Heck, I just literally this morning, I'm working on 6 of my houses getting refinanced, each individually, 25-year amortization, 4%, 5-year term, and I'm doing an 80% cash out. It's just absolutely fantastic what you're able to do by building your network when you're local. So doing that's a huge piece of what we're looking to do. We want to refinance and reposition ourselves, improve our cash flow here while rates are as low as they are. And then actually we're working on a couple other fun things. We're doing some new builds out here. We're working on building 3 duplexes out here. We actually already own the plot. And so now it's just, our opportunity to kind of, increase the value there and drive up some rents. And lastly, just continuing to be a resource for people. We put ourselves out there as somebody who, we don't charge for our time to help other people get started in real estate. Respect the heck out of what you're doing, but we want to help 1 million people, improve their financial position. And so we put ourselves out there. So that's kind of all of the real estate that we're working on at the moment.
Sweet. That's a lot going on, but if you love it, right, it's not that much work. Is that what your shirt there is? 2 dogs. What does it say?
Oh yeah. So it's a parody shirt. So 2 dogs and a tool. It's a parody of a local company called 2 Chicks and a Hammer. And they're on Good Bones. They're on HGTV. I've got 2 golden retrievers who've been walking around. I apologize if you've heard them gnawing on a bone or anything like that.
No.
But I'm the tool, and I've got the 2 dogs who are helping me with the real estate.
Right on. Okay. Well, is there anything else we kind of missed? I know you said you want to circle back to the financing, but did we hit it all, or is there anything else you wanted to touch on?
I think we largely hit it. Just the fact that I really want your listeners to not assume that because they've heard something as conventional wisdom on Bigger Pockets podcast, that it's the case. Heck, I'm learning every day. For instance, that financing deal I was just telling you about, I never would have thought that was possible until I got out here. And I talked to probably 10 or 15 different local lenders and found somebody who was willing to work with me. So I highly recommend, don't, just assume, hey, I'm going to get my 10 loans and then I'm done. And I guess I have to go up to apartments. Otherwise I'm shot. Like I'm about to reset my 10 right now, and I get to go and do it all over again. If that's what I want to do, or I can kind of, move on to the commercial space. I've got, the world is my oyster. So highly recommend everybody, network. I hope that's what everyone takes away, whether it's property managers, lenders, other investors. There's just so many good resources out there. And particularly right now, like now is the time to refinance. If you guys have an opportunity to redeploy any of your mortgages, now's the time to do it, because they are at historic lows right now.
Yeah, I just refinanced 3 properties, and it took a long time, but it's it's definitely worth. I think I got like 3% or 3.5% on all 3 of them for like 30
That's awesome.
years. And so it worked out well. And then another house I bought, I got a 2.75 on a single family. So I was like, that's great. You know what I mean?
Yeah.
Obviously, if you're going to go to a local bank and get like, what's it called? Like, financing for multiple properties that they hold on their books or whatever.
Yeah. A blanket or a portfolio loan.
Portfolio loan. That's what I was looking for. Blanked out there. It's going to be a little bit higher, but still like historically low the whole time.
Yeah.
So,
well, those are the ones that I just got, the 4%. Absolutely fantastic. And I think we can all agree, we are likely facing a very inflationary environment in the near future. I think we're about to have the roaring 20s part 2 here, as everybody's really ready to go out and party, and all that money that people weren't spending on vacations and stuff over the last year. I think everyone's about to go hard, and with how much money is being put into the economy right now, locking in these low interest rates is only going to accelerate your returns when you're kind of looking at what's probably coming up over the next couple of years.
Okay, well, that was my next question before we kind of transitioned out, is like, what do you see to come? Because there's a lot of people not working or have lost their jobs, so like that part of the economy, I don't know, is slowing down. But on the other side, like markets are hot everywhere. houses are selling. There's no inventory. Interest rates are low. So what do you see in the future? You think it's going to continue to go up or crash, or what's your thoughts?
Yeah, I know everybody's been predicting a crash for a long time. I don't see it happening for the foreseeable future, mostly because I don't think the politicians in place are going to let that happen.
Mm-hmm.
So, the things I think are probably going to happen, and this is just based on what the Fed has been putting out there. I don't think interest rates are going anywhere for a couple of years. So, because they are trying to push actually for an inflationary environment. So, I don't see that changing all too much. I do think that actually home values could go up even more in the near future, as there is talk about a $15,000 tax credit for first-time home buyers. And actually, first-time home buyers could extend to people who haven't bought a home in the last 2 years. So if that happens, it's absolutely going to have a positive effect on pricing, as there's going to be more demand for the same homes. So truthfully, I wouldn't make a recommendation for anyone else, but I'll tell you what I'm doing. I'm trying to get as much fixed rate debt as I possibly can that's backed by cash flowing assets. That is kind of my objective, because I believe inflation is going to be 2% or higher for the next several years. And that's just going to eat away at the principal while I continue to cash flow.
Mm-hmm. Yeah, that's definitely true. So all those loans that you're getting, that's, you're able to get the loans because you have a good job in W-2. Have you heard of loan programs out there for people that might not have a great W-2 or intermittent work or have lost their jobs?
So yeah, that's actually why I highly recommend working with local lenders. These actually aren't based on my income at all. These are asset-based loans. And so they're essentially being treated as commercial properties.
Because you're buying, because you have portfolios, right? So
each one of these are individually refinancing each home individually, and it's a commercial loan. So it's not based on my income, it's based on the income of the property itself.
Okay.
Yeah.
Sweet. Well, yeah, that's good information. We've covered a lot of stuff. I appreciate you being here. Where can people find out more about you, how to get help from you if they want to reach out, and anything like that?
Yeah, absolutely. People can reach me at nick@giulioni.com. I hope it's in the show notes, because it's a lot of vowels. You can also find us at giulionirealestate.com. Or I'm on Facebook, Nick Giulioni. There's only one of me in the entire world. You're not going to get me confused with anyone else. So feel free, reach out. You can get time on my calendar. I'm more than willing to chat with anybody who's interested in real estate.
Right on. Nick, appreciate that. That will all be in the show notes, and I'll spell it right and say it right in the future, because I said it wrong in the beginning of the show. But anyways, thanks.
You're closer than most. I appreciate it.
Thanks for being here, man. Everybody reach out to Nick, and I'll talk to you later.
Thanks, guys.